This material is made available to you by or on behalf of the University of Melbourne under Section 113P of the Copyright Act 1968. It may be subject to copyright. For more information, visit the University Copyright website.
A very warm welcome to all of our participants joining us today for the launch of the landmark report, Winning in Asia, Creating Long-Term Value. My name is Mukund Narayanamurthy, and I am the CEO of Asialink Business, Australia's National Centre for Asia Capability, established by the Commonwealth Government Department of Industry, Science, Energy and Resources, the University of Melbourne, and the Myer Foundation to create an Asia-capable workforce in Australia. I would like to begin by acknowledging the traditional custodians of the lands on which we are present today and pay our respects to their elders, past, present, and emerging. We extend that respect to Aboriginal and Torres Strait Islander people who may be attending the online event today. Winning in Asia is a partnership of Asialink Business, the Australian Institute of Company Directors, Chartered Accountants Australia and New Zealand, the Commonwealth Bank of Australia, and the Sid and Fiona Myer Family Foundation. It is released at a most challenging time for the Australian economy, with the findings and recommendations to be considered in the context of mapping a sustainable, long-term recovery from the pandemic. Winning in Asia seeks to dispel many of the commonly held perceptions of the challenges of doing business with the region. It considers major questions posed over a long period of time by Australian business leaders, policymakers, and investors. For instance, does offshore expansion lead to superior returns for the shareholders of Australian companies? Which companies, Australian and non-Australian, have grown market share, profitability, and returns in Asian markets? What are the capabilities Australian boards and senior executive teams need to engage or to enable their respective organizations to succeed in Asian markets? And how can Australian companies best manage the risks associated with doing business in the region? Together with a task force of some of Australia's preeminent business leaders and our knowledge partners, we have considered these questions which have profound implications for the Australian business and investor community and government. I would like to acknowledge our task force members, Sid Myer, Angus Armour, Ainsley Van Onselen, and Jonathan Young for representing our project partners. I also acknowledge Yasmin Allen, Peter Varghese, Diane Smith-Gander, Christine Holgate, Martin Commons, Sue McLeman, and Ajay Bhatia. I would like to thank all task force members for generously contributing their time, expertise, and networks. They have each played an invaluable role in validating the report's direction, findings, and recommendations. Thank you for your leadership. I would also like to sincerely thank our knowledge partners, the Boston Consulting Group, Ellerston Capital, and Cooper Investors for partnering with Asialink Business in developing the content for this report. My most sincere thanks to Damon Wodak, Daniel Selkowitz, Mary Manning, and Sharma. My most sincere thanks also to my senior colleague, Penny Burt, the Group CEO of Asialink, who authored a key section of the report. The report includes over 300,000 data points of analysis, which has been complemented by over 250 consultations over the last 2 years. On behalf of the project partners and task force members, I'm particularly grateful to the CEOs, CFOs, board members, and thought leaders who contributed extensive time to be interviewed for this report. I will acknowledge them over the course of this event. Today's event provides the first opportunity to hear about some of the findings in the report. We will hear from Daniel Selkowitz from BCG on whether offshore expansion delivers superior returns, from Sharma on the key factors to consider when developing business models to succeed in China's highly competitive markets, and from Mary Manning on multinationals that have succeeded in India. We have focused on these three leaders for the first event to showcase the fresh, evidence-based analysis underpinning this report. Following their presentations, I will share with you at a high level some of the other areas of analysis also covered in the report, which will be the detailed focus of subsequent events. I will then introduce and facilitate our panel discussion with an esteemed group of business leaders who I will formally introduce shortly. I would like to highlight again that this event is being recorded. I invite all of you to share your comments and questions for the panel discussion. But first, it gives me great pleasure to share with all of you a special message from Senator the Honourable Simon Birmingham, the Minister for Trade, Tourism and Investment, formally launching the Winning in Asia report.
Hello everyone, I'm thrilled to be able to join you in this pre-recorded format to celebrate the task force that has produced this tremendous report, Winning in Asia, Creating Long-Term Value. I'm disappointed though that I'm unable to join you in person. That's because today, as you launch this report, I'll be in regional South Australia. Interestingly, both the location that I'm in and the means with which we're communicating has some resonance in relation to the report. I'll be in Ceduna and Port Lincoln at the time of the launch, here in South Australia, and I'll be there partly to see the export markets of premium Australian seafood that is destined for markets across particularly Asia, emphasising the link between some of the most remote parts of Australia and our Asian markets that are so increasingly important. But also in terms of the means, I'm joining you virtually, which as we all know is a sign of the times for us all right now. But it does also emphasise the increasing importance of digital communications, of digital trade, and the areas that I know we'll be exploring more of. Our government's priority since the emergence of the COVID-19 pandemic has firstly been to protect the health of all Australians. And I thank many of you who've made sacrifices to help us in that regard. But our second priority has been to protect Australia's economy, along with the jobs and the productive base of business that are so important to our future. Our mind is now firmly fixed on how we also create a platform for Australia's long-term economic performance to grow our way out of the challenges we now face, to create further jobs, prosperity, and of course to deal with the debt repayments we will face in future years. Asia has a crucial role to play here. Despite the shocks of COVID-19, Asia will continue to be a major source of economic potential for the world and especially for Australia. I want to make three key points in the launch of this report today. Firstly, that our government has worked hard and continues to create the business platform for business engagement in Asia. We encourage and support engagement of Australian businesses across Asia as we do across the world. We now have some 14 free trade agreements in place, covering 20 different partners and markets, and 10 of those agreements focus on partners and markets in Asia. This includes bilateral strategies with key partners in the region, including China, Japan, the Republic of Korea, Singapore, Indonesia, and our ASEAN partners as a whole. Our partnership with Indonesia, long awaited and long fought for and worked for, came into force on the 5th of July. And only last week, I was excited to sign a landmark digital economy agreement with Singapore, one that I expect will be the first of many and one that is part of a key partnership between Australia and Singapore to demonstrate openness and reform in digital economy and e-commerce around the world. I would encourage all Australian businesses looking to invest in Asia to take advantage of the access we have secured through these free trade agreements. Our government has opened the doors for business to trade and to get preferential terms and access to trade across our region and the world. But business needs to choose to walk through those doors and to be informed about how they do it to ensure they succeed. There is, of course, a real incentive for business to go offshore, and that's my second key point. The case seems clear, as this report suggests. Revenue growth is faster in companies with some offshore elements. Evidence suggests that larger, internationally diversified ASX 200 companies create more value for shareholders than ASX 200 companies that are domestically focused. We know that those companies deliver better benefits to their employees, faster growth, and of course ultimately greater benefits to the nation as a whole. I encourage businesses to work with our Austrade and DFAT teams as they look to explore opportunities for growth and diversification. Businesses should see the diplomatic network as a resource, including a resource for market intelligence in overseas markets. We made this utilisation of our diplomatic network a clear priority in the Foreign Policy White Paper. Economic diplomacy is at the core of what we expect all our agencies offshore to deliver upon, and you should feel free to engage them in that mission. Of course, the third point is that there are clearly lessons to be learned. That's a lifelong process for all of us. Australian businesses have had major successes in Asia, a long history of engagement now with the region, but we can always do better. I commend the report's comprehensive strategic approach to outlining how to win in Asia. The 14 strategies identified are relevant to business, to government, to intermediaries, to peak bodies, business councils and industry groups. It provides a roadmap for us all to work collaboratively to increase the dividends from working with Asia. Can I recognise first the sponsoring organisations and thank those who have given their time. Asialink Business, the National Centre for Asia Capability, the Australian Institute of Company Directors, Chartered Accountants Australia and New Zealand, the Commonwealth Bank of Australia and the Sid and Fiona Myer Family Foundation, and also particularly the 11 pre-eminent Australian business leaders who comprise the task force and have very much made this a report by business for business. Best wishes to you all for a successful launch, but even more importantly, great success in implementing this report, its recommendations, working together as business with government to deliver the greatest possible success for our nation in the future. Thanks so very much.
My most sincere thanks to the Minister for formally launching this report, for his emphasis on this being a report by business, for business, and for recognizing the partnership role business and government need to play to execute the vision of this report. I'm delighted now to invite all of you to download the report from winninginasia.com.au. More details on this microsite to follow over the course of this session. I would now like to invite Daniel Selekowitz, Fiona, and Mary Manning to share a few of the key findings from a couple of the key sections of the report.
Terrific. Thanks very much, Mukund, and good afternoon, everyone. My name is Daniel Selekowitz. I'm a partner at Boston Consulting Group, and I co-lead our principal investors and private equity practice here in Australia and New Zealand. On behalf of my co-author, Damien Wodak, and the broader BCG team, I'm delighted to have been a part of this undertaking together with Asialink and together with the other esteemed partner organisations that are represented here today. And I'm really pleased to have the chance to share with you some findings from our work today. Our chapter of the Winning in Asia report focuses on one key question: does offshore expansion lead to superior returns? And in developing this chapter and tackling this question, we've taken a quantitative approach to examine trends in offshore revenues among Australian companies and to explore the relationship between offshore expansion and shareholder value creation. So in the next 3 minutes, what I'd like to do is share with you 3 of the main findings from our analysis. First of all, Australia's largest listing companies are becoming more and more internationally diversified. Looking at the last 5 years, as domestic growth has plateaued in many Australian industries, ASX 200 companies have looked offshore increasingly to drive growth by increasing their exposure to foreign markets. And we can see this in the numbers, including in the graphs shown on this slide. The aggregate amount of foreign revenues generated by ASX 200 companies grew by 26% from 2014 to 2019, reaching 35% of all revenues by the end of the period. Meanwhile, at that same time, revenues from domestic sources remained relatively flat. Perhaps unsurprisingly, the share of revenues from foreign sources among ASX 200 companies has increasingly been driven by growing exports throughout the Asia-Pacific region. It's worth noting also that local industry dynamics here in Australia have played a significant role in influencing the decision to expand overseas, with materials, healthcare, and information technology the most highly exposed to offshore revenues. Secondly, Australia's largest listed companies are more internationally diversified than their counterparts in the UK and the US. Australia's level of international diversification has not only grown over the last 5 years, but it has grown faster than that of its peers, and it now outstrips both the UK and the US. The US in particular has seen a decline in its relative exposure to overseas markets during this period, following recent protectionist policies and trade tensions between the US and China. By contrast, Australia's large companies, in particular but not exclusively those in the mining and materials sector, have materially increased their exposure during this period. Finally, and perhaps most germane to this report, we've observed that large internationally diversified companies create more value for shareholders. Based on our analysis, there's evidence to suggest that among large companies, those that are internationally diversified create more value for shareholders than their domestically focused peers. Among medium and large market cap companies in Australia, internationally diversified players outperformed their more domestically focused peers on average in long-term value creation, measured by a 5-year total shareholder return from 2014 to 2019. Internationally diversified companies in the medium-sized group achieved on average 82% more shareholder returns, while in the large group they achieved on average 36% more shareholder returns. Now, in closing, there is no one-size-fits-all answer to international expansion, and we would encourage business leaders to systematically assess geographical expansion against other growth opportunities on a case-by-case basis. Nonetheless, I think our analysis reinforces the growing prevalence and the growing value of international revenues and offshore expansion, even or perhaps especially in the midst of the current unprecedented economic volatility. Before passing the baton to Shalma, I'll just take this opportunity to invite those listening to reach out to me via LinkedIn or bcg.com if you've got any questions or reflections on the specific analysis in our chapter. Very happy to continue the conversation.
Thank you, Daniel. Hello, everyone. My name is Chow Ma, and I'm the portfolio manager of Asian equities at Cooper Investors. Across the team, we go to Asia about 15 to 20 times a year, conducting about 500 meetings with various Asian companies. So it's my absolute pleasure and honor today to share some of these on-the-ground observations, particularly in China, and hopefully some of these conclusions could be of help for some of the domestic companies here based in Australia. When we think about the China today, it's unsurprisingly very different from what the country was a few decades ago. If I have to categorize some of the most standing features of the Chinese market, the two things really stand out. One is the incredible maturity and sophistication of the domestic companies and domestic competitors to any of the international companies. And the second one is the ever-changing, very fast-paced change of the consumer taste and regulatory landscape. So maybe let's talk about the domestic competitors, which to us is a fascinating chapter in both the country's business history and also have deep implications for anybody thinking about coming into the Chinese market. Over the past few decades, three things have changed for the domestically based Chinese companies. From the capability side, they really evolved from companies that are very good at producing low-cost goods at an efficient way and have a massive distribution force deep into the tier 1, 2, 3 cities, into now, because of the consumption upgrade, very R&D and quality-focused product companies. They've also had a very substantial IT upgrade altogether, digitizing their supply chain and every aspect of their operations. On the people side, the first crop of Chinese entrepreneurs are really ex-SOE employees who privatized a piece of the SOE business and started a business that way. Nowadays, when you go to a sophisticated Chinese business, who you're seeing is most likely someone who was educated overseas, have worked in a multinational company, probably a digital native, as what we call them, reasonably young, tech savvy, passionate about a business, and actually have a very high level of integrity and governance standards as well. And lastly, on capital. The domestic companies now have access, not just the domestic capital market, but also the free cash flow they've generated over the past few decades, as well as access of international markets in the US and Hong Kong. As a result, they have not only upgraded their own operations and invested in themselves, they even have the capital of buying companies just for their Chinese operation, or sometimes international companies altogether. So we're actually seeing the international portion of these domestic companies going up over time. So what does that really mean for Australian companies thinking about going to China? I think our two key takeaways, the first one is the proper investment is needed. Long gone is the approach of doing an asset-light, small representative office on the ground with 3 to 5 people, really just exporting the product into the country. We strongly believe that you need a on-the-ground team. It doesn't need to be a very massive fleet, but it needs to be a very focused, empowered team that's very keeping their ears close to the ground and watching the consumers' movement and adapting to the taste change. IT infrastructure is absolutely a must. And then, we will say the crown jewel of the IT operations is really the understanding of your own consumers. The question should always be asked, do you understand who your consumers are, where they live, who they are, and why they choose your product over others? The second one really come back to the people and the culture. In order to really compete with these very what we say progressive and entrepreneurial local companies, the local offices of Australian companies also need to have an entrepreneurial culture to empower the local team to make real-time decisions on marketing, on distribution, and sometimes even products themselves is absolutely key to success. To sum it up, entering China really means to embrace change. And it's not just about the operations or the IT infrastructure, but it's more on the mindset and the culture for the business leader. Thank you.
Hello, everybody. Thank you so much for joining us today. It really is a privilege to be able to speak to you today. My name is Mary Manning. I'm the portfolio manager of Ellerston Asian Investments. I'm also the portfolio manager of the Ellerston India Fund. So today I'm going to talk to you about what it means for Australian companies to be investing in India. So moving along to the first slide, I guess in the process of doing this analysis, one of the most important things that came out is that Australian companies need to engage in Asia. They need to engage in market diversification. So when many companies think about going to Asia, they automatically think of going to China. And that's fair enough, given some of the things that Chow just said. But, China is not the only country in Asia, and India is very fast growing, and it's a very large country, which is also going to demand a lot of attention from companies in Australia. So one of the first important points that I want to make is that India is not the next China, and that strategies that have been successful in companies going to China and going elsewhere in Asia are not going to be the same strategies that are successful going to India. So this is what a lot of the bulk of this report is about. I looked at what sort of strategies are successful in India. So I looked at 9 different case studies, and these span across sectors: consumer, financials, insurance, materials, a lot of different sectors, and they span across business models. So I looked at majority stakes, minority stakes, franchise agreements, distribution agreements, M&A, VC investment, and joint ventures. And the conclusion from that is that India is not a one-size-fits-all country for investment. India is very diverse even within the country, and so companies need to have strategies that recognize that. So one size does not fit all in India, but there are some important factors for success which are common across all the different business models and all the different sectors that I looked at. I think the first one is that, very similar to what Chow said, India requires investment. Even more so than China, India is not an export market where you can just sit in Australia and export your products to India and hope that everything's going to be fine once they get there. India requires investment and it requires boots on the ground. The second very important takeaway from the case studies is that India requires localization. So in addition to looking at a number of case studies where companies were successful investing in India, I also looked at some case studies of companies that have failed investing in India. And two names which everybody will be familiar with are GM and Kellogg's. And even though these are major multinational companies that have expanded to many different countries around the world, they both failed in India because they failed to localize their products. So that's a second major factor for success, which is very important in India. And then the last one, and probably the most important one, is that companies, if you want to be successful in India, need to take a very long-term view. So I was surprised when I was going through a number of these case studies at when these companies actually started investing in India. Hindustan Unilever, for example, started investing in the 1800s. Standard Chartered had been in India for hundreds of years. Nestle, which is the example which is on the next page, Nestle started investing in India right after independence. And so if Australian companies want to be successful investing in India, then they need to take a long-term view. India is not a country where you can start investing in August and be successful by September, or start investing in 2020 and be successful by 2021. It requires investment on the ground and a very long-term time horizon. So just moving on, those are the main important points from the study. But I'd like to spend one last minute just talking about why this is important. And if we go to the last slide, I believe it's slide 19, this slide highlights why companies should go to India. India, in all the sectors that I looked at, with the exception of materials, the ROEs for Indian companies were higher than the ROEs for Australian companies in that sector. So going to India is not just because it's a big country and because there's lots of growth there and there's lots of opportunity. Investing in India can lead to higher shareholder returns for your shareholders, and that in my mind is the holy grail of what investing is all about. So thank you very much for your time. If you have any follow-up questions, please feel free to contact me on LinkedIn, and thank you for the opportunity to speak today.
Thank you, Daniel. Thank you, Xiao, and thank you, Mary, for those absolutely terrific insights. For completeness, I'd also like to highlight that the report also includes 8 Australian public company and private company case studies to complement the 14 case studies in the analysis undertaken by Sharma and Mary Manning. In total, 22 case studies in the section on best practice and business models in Asia. So in addition to India and China, through the case studies that we have developed with the CEOs and CFOs from Cochlear, IDP Education, Lend-Lease, Treasury Wine Estates, Xero, Car Sales, Hurricane Grill, and the SILC Group, we've also covered markets in Southeast Asia, Japan, and South Korea, addressing what is obviously a real focus at this point in respect of market diversification. The report also includes an updated analysis of our 2017 match fit analysis on board and senior executive capabilities to do business with the region. We studied 1,705 board members and senior executives and assessed each of them against 6 key capabilities to determine how prepared they were to do business with the region. While the headline number does not appear strong, I must highlight that we have set a high benchmark for being an Asia-capable senior leader. My most sincere thanks to Kee Wong, Nicola Wakefield-Evans, Diane Smith-Gander, and Melanie Brock, in addition to the AICD, for their expert comments on this section. We also studied the area of risk, but through the lens of the external affairs function. My senior colleague Penny Burt led this analysis, which holds very important implications for Australian companies seeking to manage stakeholders, brand, and reputation in Asian markets. It also includes a focus on media sentiment to its business in Asia relative to other markets. My most sincere thanks to Anna Whitlam, Michael Smith, and Emma Connors from the AFR, and Peter Tsai for their expert comments in this section. Finally, the report also includes 14 evidence-based strategies for business, government, intermediaries, peak bodies, business councils, and industry bodies as you heard the Minister refer to. I encourage all of you to read the report for the analysis on these sections. We will be delving into these areas in our next few events. It now gives me great pleasure to formally introduce our panel members who will share with us their perspective on the findings in the report. A very warm welcome to Christine Holgate, Diane Smith-Gander, Tony Lombardo, and Sid Myer. Christine, welcome. I'd like to start with a question for you. Winning in Asia discusses the impact of COVID-19 on the external economy, in particular on trade, foreign direct investment, and air travel. There is also the persistent tension between protectionist sentiment and globalization. What are your views on the future of Australian trade and investment over the next 12 months?
Thank you, Makand. Look, I think it's going to be quite a mixed result over the next 12 months. Clearly, 70% of Australia's exports are in the resources part, and I think we all saw how the fantastic result Fortescue brought home, and iron ore still doing incredibly well. But as you know, for many other parts of our exports, they're going to really struggle. And there's some, not because of a lack of demand necessarily, but for some very practical reasons. And one of those is there's a lack of international line haul. And if you can get it, it's very expensive. Just this morning, Malaysia has announced that they won't be sending parcels and letters around the world for a period of time because of the lack of line haul in the marketplace. So people can't get their products to those markets, or they can't get the component parts into this country to make their products. Secondly, we've effectively had a closure of our borders here in Australia, and that's of course had a devastating impact on tourism and the universities and students. So they're going to go through a really difficult time. And boards themselves will need to really focus on their core market, which for many Australian companies, Asia is actually a secondary business to their core market, and capital is required right here, right now. So when they're looking, they'll be spending an enormous amount of time on risk assessments. And while they're looking at those, it is going to mean they're going to have that really strong domestic focus. And fourthly, very practically, you can't go. So when you can't go, it's pretty difficult to manage it. So I think for the next 12 months, it's going to be pretty mixed.
Thanks, Christine. If I could just build on that, given strategies with Asia are often in the long term, and a lot of our discussions with the CEOs of the companies that have a presence in the region certainly are taking that very long-term perspective. And I was keen to hear your views, in particular on some of the findings from BCG's analysis on the fact that large internationally diversified companies generate better shareholder value than domestically focused companies in that mid group and in that large group. And I was keen to hear your views, just given your extensive experience running, obviously, multinational companies. In your view, what are the key factors that enable an Australian listed company to expand internationally and deliver those superior returns?
Well, I think, first of all, you really need to be able to, and I think some of the earlier presenters shared this, you really need to be able to, first of all, articulate that what you've got to export really is needed in that marketplace. And just because it does really well here in Australia, it doesn't mean it's going to sell really well in Asia. And that's really important because it is going to require investment. The days of just putting it on someone's website here and hoping it sells in Singapore or China, those days are over. You really need to invest in a local presence. And you need to have done a risk assessment for your board, which really underpins the whole legal and operating environment, your cash perspective, how you're going to manage your inventory. It's really critical that your board and shareholders are bought in on your journey. It's not a quick win. It requires patience and it requires investment, and things go wrong on that journey. So if your board don't really understand and haven't really bought into that strategy, then you're likely to have even more challenges. you must get funding, and funding from a source that understands Asia, not necessarily your same bank that funds your domestic business and expansion. And really importantly, you must build that Asia capable talent, which your report picks up an enormous amount on. You know, I think that Asia capable talent, my personal view, requires some different aspects. One is it's not just that it's got that strong local knowledge, but it also understands the complexities that we have as operating as an Australian environment. So you can't just, for example, have a great Chinese business leader. It's preferable that they understand what we are obliged to do as an Australian listed company. And also preferably a little bit about the sector knowledge, because regulation is so different in each market. And what's right for one industry sector, the regulation can be very different from another. And if you get that, and that should be in the board as well as the executive and the local team, you really do need to build that strong local team to manage many of the things the earlier presenters shared, like really understanding your local channels, your way to go to market, your payment solutions, who you're going to partner with, who's going to look after your brand.
So very helpful insights there, Christine. Thank you. And I think we've got just the perfect person to bring some of those to life with a case study in Tony Lombardo, who I'd like to invite into the discussion, as Tony's been obviously leading the charge for Lend-Lease in Asia. Tony, just building on the points that Christine's made, could you share with us a little bit about how Lend-Lease has developed the comprehensive approach that I'm certainly had the opportunity to have some visibility of to identify growth opportunities? How do you match global trends to your strengths?
Yeah, no, I think the points Christine raised are so relevant and valid at the board level. So you have to get that firstly signed off as part of your core strategy. I think the next level is you've got to make the commitment that you're going to invest a certain amount of your portfolio. So if you've made the commitment, therefore you've got to have that certainty that you've got the capital there. As a Lend-Lease, at the Lend-Lease group level, we've now allocated, I've got up to $2 billion of equity to support my investments across the region. So I can really play because I've got the right capital. I'm bringing in other parts of my platform where I've got investors in our investment management that want to invest in the market. So I think that's quite important. As a group, from our skill sets, we look at, gateway cities around the world. So for real estate, being very specific, we did an analysis of the global gateway cities. We picked 40 key cities. Of those, we tiered them into tiers 1, 2, and 3. And there are a number of key Asian cities around the world that came up to, our core top 15 cities that we wanted to operate in. I think you then assess your own capabilities that you have. And I think this is important about competitive advantage. You have to understand what you bring to that market, either from a service or a product level, and to why people are going to deal with you. And the Australian brands do have a level of trust. So it's making sure that you go in with the appropriate purpose to really drive what you're trying to deliver. And for us at Lend-Lease, safety, sustainability are two key principles. We use those to really differentiate ourselves when it comes to our end product. But I do want to talk about this trends that you talked about. From our business, we then look at some macro to micro trends. So urbanization, where cities are urbanizing around the world, we picked that as a core trend. We then look at a city such as Singapore, which we secured a large project going back 5 years ago. We had to do the micro analysis of why we could build a better product compared to the competition. It was an open tender. We were bidding against 10 other bidders. We fortunately secured the opportunity, which we've now completed this year. But it required me to have the right local team, right local knowledge to understand what was missing. And I think Lend-Lease's Australian knowledge, our international knowledge, helped us really create a product that we felt met Singapore's needs, but also took it up a notch when it came to sustainability, when it came up to safety, when it came up to how we'll deliver the project. And we used it as an exemplar to share with the market. It wasn't just going in there and saying, hey, we're going to do this. We actually shared it with our competitors, shared it with government, actually opened it up to be building those long-term relationships, which we thought are going to be quite crucial for us in our success in future projects and what we're trying to deliver. The governments, from customers and the like, it can be JV partners in the long term. So one of the key things is you're always building relationships. And I'd suggest that if you're going to make a real push into Asia, invest the right amount of time in these relationships, because they're going to make the difference in how you're going to succeed. And that's at multiple fronts. You can't be a fly-by-nighter just coming in. You got to set yourself up with a long-term presence to be wanting to succeed in this marketplace. So lastly, I'll just say you have to take a long-term view, because things are going to go up and down as you go through cycles. So you have to be prepared for the good and the bad as you move through different cycles. So you got to set that strategy at the board level that you're here for a long term.
So Tony, I'm glad you touched on the long term there, because there's been quite a bit of interest from our audience wanting to understand, how do you create that long-term DNA in Australian companies? I'd love to hear some of the key things you've done at Lendlease to develop that long-term view.
I mean, from my perspective, we've, again, at group level, we've decided we want to be an international company and we want to diversify. I think when I look at the way we've now set up our teams, one of the key things in the last 4 or 5 years has really been driving to, looking at our local talent. And when I got to Asia, one of the things I really wanted to make a difference at the executive ranks was shift the mix of local executives in our team. If you came here originally, you would have seen a lot of British nationals or Americans or Australians, and we've shifted that. So, we've gone from 45% to 65%. It doesn't sound like a lot, but that's a pretty big shift at our executive ranks on who's running the business now in each of our countries. And I think, one of the things I look at my team in China, my whole leadership team are local nationals. They've got, significant careers in big other multinationals. They know the markets, they have the relationships, they have the connections. And so very important to bring in that talent. And so for me, if you're going to set yourself up long-term, you need to take a view on your long-term talent. For our business, which we are boots on the ground, which Christine pointed out, you have to make sure you're getting that set up right. And then to me, it's just the foundations of the relationships. Now, from a Lendlease perspective, we're investing in projects. So we're bringing foreign capital in and we're putting our own capital. We're investing in projects that sometimes are 5-year projects, other projects can last up to 15 years. So we become a key partner to government as we deliver those projects. So we are really taking a long-term view when it's not a short-term investment that we're making.
Thanks, Tony. That's terrific. And I know that at the group level, also the support of your board has been really instrumental as well. And we'll come back to that. But I might go to Diane at this point to actually speak to us a little bit about the case study that's in the report, Diane, on the Wesfarmers board and the highly strategic long-term approach that Wesfarmers took to supporting the organization to expand into Asia. Could you elaborate a little bit about that approach?
Yeah, sure, Mukund. Thanks for the opportunity to be involved in the report. It's come together really well and congratulations on it. Wesfarmers, of course, is a conglomerate and we have a divisional autonomy model. So it's really the divisions who are responsible for assessing market opportunities. And really what most of our divisions have been on is a journey to determine what their supply chain presence should look like in Asia. And we have, deep involvement there in sourcing. And the board, of course, needs to provide effective oversight on this. But as Christine said, isn't it so important to bring your board along on the journey? And so our board has been on the journey to Asia twice. So the full board travelled to Asia. We were in China in the main because that was a key destination for us, the sourcing. It gives you the opportunity to understand what the Australian ecosystem is in China, which I think is very important to Australian companies. So you meet the ambassador, you meet the DFAT representatives, Austrade and so forth. You go around and talk to your suppliers from Australia who are there, your banks, the consultants, the tax people and so forth. And you start to understand what that looks like. You meet the Wesfarmers people on the ground in the sourcing office, get a sense of them. You visit some suppliers, you visit some potential suppliers. One of the most interesting things for me was getting on the train that went from Shanghai to Beijing. And you really get a sense of what's going on in agriculture. It's very different. Count the tractor, only 7 of them in, 1,500 kilometres. Looked at the buildings that were going up and then came back a week later because I spent a bit more time back in Shanghai looking at retail and saw the progress that had been made in the accommodation. So really quite crazy. But also, Wesfarmers made the decision to put some really trusted executives into the Asian market. So these were executives the board knew, who went and were based in Hong Kong and looked broadly across the region. And they didn't go for 6 weeks to do a market scan. They went for years. And I do think this notion, you take the long view and you really got to embed yourself in the market. So it really did mean that we developed a much deeper engagement and understanding, and you can see over time how the sourcing relationships have deepened and our ability to manage them really effectively and to Australian consumers' expectations, have been able to be supported in that way.
Thanks, Diane. And Tony, if I can bring you back into the discussion, your own experience with your board. I know you've got a couple of key board members who have been quite instrumental given their Asian experience.
Yeah, no, look, I think the board support is fundamental. I'm fortunate to have Nicola Wakefield-Eggbins and Jane Hemstridge, who have both got Asian experience and spent a fair bit of their career here. So, coming here, able to get a bit of a debrief to what to expect myself when I was taking my view to come across. The board does the same thing. Annually, we have a board visit in each of our different geographies. So I'm organising for them to meet the stakeholders, from governments to key banks to, different people that deal with our business. And I think that's quite crucial. I mean, one of the things new chair Michael Ormer, when he was looking at the different markets, he came and spent a week with me in China and really just spent on the ground time with the team to understand what we were doing as we were entering the senior living field. And so he wanted to himself get the confidence that we had the people and the right executives leading the charge there. So to have that level of board support is so crucial to the success of the business, because you need that backing to have the confidence to take a long-term view.
Thanks, Tony and Diane, for those terrific examples. Diane, if I could come back to you. From a board perspective, we get a lot of feedback about how boards, particularly in Australia, could potentially do a bit better at attracting, recruiting, and retaining Asia-capable talent. What are your views on that expectation?
Yeah, look, I think, in talking about Asia-capable executives, you really can't ignore the importance of governance. And so there is an equal need for Asia-capable directors. Look at the great deal of importance that's been attached to gender diversity on Australian boards, particularly large listed companies. And while progress is slow, at least most large companies have 30% female directors. But when it comes to the club of directors that have Asian heritage or deep enough Asian experience to be seen as Asia capable, it's a very, very small club. So how can you go about attracting, recruiting and retaining some of these Asia-capable directors? Well, one way is to grow a few of your own. So if you have executives that have been in that market and then come back to Australia to pursue the next part of their career, that's a pool of directors that you can access. And amazingly, about 10 minutes before we got on this call, one of my ex-Broad Spectrum board colleagues sent me the CV of such a person. But I think, the COVID experience has also taught us that we can do a lot more virtually than we've ever done before. And it might seem a crazy thing, but travel and the cost involved in travel is actually an impediment to directors from outside Australia. It might seem crazy, but as a Perth-based director, I can definitely tell you that not being in market and under the nose of recruiters, as a for example, can actually be a real barrier. But really, the most important thing is that you actually need to recognise that you need the skill set and you need to actively seek it out and you need to make it clear you are seeking it out. Because often people say to me, gee, how did you get on X board or Y board? And I say, because they actually asked me. And that is the most important thing.
Yeah, so Diane, just on that point, another significant area of feedback that we have is the back and forth that we hear between nomination committees and executive search firms. Nomination committees highlighting that they work with the supply, and executive search firms noting that they work with the demand. And if it's not as part of the profile that's part of what is being asked of them, then it's difficult for them to go out and actually cater for a market that perhaps doesn't exist. So who actually therefore has the responsibility, and who should take a leadership role here?
Yeah, this whole supply and demand thing, you could take out Asia and put gender in it, it'd just be the same old story. You know, I lived and worked in Hong Kong very early in my career for a couple of years, and I've consulted episodically across Asia. So I'd probably scrounge up just enough experience to be seen as Asia capable. But it's certainly those experiences taught me that Asia is actually different. But it also has taught me that there is a deep pool of experienced directors available there. You know, so as it is so often the case in matters of diversity, there is no supply problem. What it is actually a demand problem. So until Australian boards start telling their nomination committees and their search consultants that they need an Asia-capable director, we're not going to get very much action. Now, of course, the intriguing thing about this is the point that you realise you need an Asian director, you know, an opportunity comes up that you don't know how to grab or something goes wrong, that's probably 2 years past the point that you needed that director. So how do you see around that corner so that you don't miss opportunity and that you don't take on a whole lot of risk? So look, of course, you know, you can access expertise and ideas in the way that the Wesfarmers Board has, and we've heard about, you know, Lend-Lease and so forth. But really, there's actually no substitute for a deeply experienced colleague who sees the world with a very different set of eyes. So don't take this to think that I favour targets or quotas for ethnic diversity on boards. But really, it just beggars belief that, you know, just as men have historically had the vast majority of board seats, it's just not credible to suggest that Asian-capable directors are not relevant when the opportunity, as the report shows, is so huge.
Thank you, Dan. A lot to think about and ponder there, but you know, delighted that you made those comments because they're really important comments. We have organizations like Advance who are participating in this discussion. Yasmin Allen, of course, was a part of the task force, and Yasmin spoke passionately about the very specific values that we need to look for in individuals who can actually help boards actually see the need for those individuals well ahead of time. And Peter Varghese, another task force member, spoke about that really the first step is about international best practice, that if you're seeking out international best practice to start with, you're more likely then to ask these types of questions to seek out those individuals. So it seems like there is some common thinking there that we need to build on. I'm going to bring Sid into the discussion. You know, Sid, with your private company hat on, you've heard this public company discussion. First and foremost, what surprises you in the major findings in this report, which has a large focus on public companies?
Well, good afternoon, everyone, and thank you for including me, and congratulations on the report. And particularly thank you to the previous speakers who really said some wonderful things about winning and engaging in Asia. There are a couple of things that surprised me about the report, but the first one was I guess the work that BCG had done to provide a substantial body of evidence that suggests that Australian companies with international focus and diversification are likely to add more value for their shareholders. I think this is a hugely important point. It often gets lost and missed, you know, particularly, if I may, around the analyst community that look at the companies that are expanding. That's probably improved over the years, but there was times, you know, when analysts would downgrade companies for not having a large enough Australian opportunity, and then downgrade companies for taking advantage of international opportunities. So that, to me, was a very important point, and I was glad to see it come to the fore. The second thing, not a surprise, but I was very pleased to see the success of multinational companies in India being highlighted. I think the development of Australia's presence in India and more broadly within the Indian Ocean is a really interesting area for us to intergenerationally think about, you know, where our future might be. In the parlance, if the Asia Pacific is the region of this generation, conceivably the Indian Ocean region is the region of the next generation. And I think a lot about that in respect of my children and grandchildren to be. So I was delighted to see, a focus on India come out of one of the pieces of work, and was highlighted again during the course of the conversation today.
Thank you, Sid. And I might just also clarify for our participants that while we showcased just a couple of the findings because of the extent of the analysis of the report from Sharma and Mary Manning, which focused on China and India, we've also covered markets in Southeast Asia. We've also focused on Japan and that great partner of ours that we always, I find, don't give as much credit and attention to, South Korea. We have an extraordinary case study of the opportunities in that market as well. So I just wanted to leave the audience with that perspective as well, building on Sid's point on India, the broader Indian Ocean, but also in terms of Southeast Asia and ASEAN. And of course, we have Christine with us, the chair of the ASEAN Council. Sid, I'd like to come back to you on private companies. Winning in Asia seeks to compare and contrast the orientation, the mindset, and the capabilities of senior leaders running our public companies with their private company counterparts. Why have private companies been so successful in Asia?
This is an area close to my heart. Private companies tend to be family companies. The interrelationships between family and business in Asia is strong, if not very strong. And, I think families like doing business with families. And hence, I think the notion of a family orientation to business unions within the region is a very strong positive. And, that's possibly part of the underbelly of what makes family businesses connect well and do well in the region. Family members like dealing with family members. Principals like dealing with principals. There's an orientation within family businesses which goes to exactly what Tony was saying about the long-term nature, indeed conceivably the intergenerational nature of the way in which families think. And that plays well to doing business in Asia. I think the other thing which should be said is that family businesses don't fit the statutory reporting cycles which other organisations and public companies are bound to fit to. Family companies don't have to announce their expansion plans. They don't have to telegraph their intentions for markets. They're able to work in a slightly more opaque way within the environments, and I think that's to the advantage of family and private businesses within the region. So those are a few things that I think help families and private companies doing business in the region, which is not to say for a minute, the public companies we've heard from and others aren't doing fabulous work there, but families I think benefit from a couple of those points. The last point in the family, in the sort of the family business area, is a lot of those companies are SMEs in Australia. And I've often felt the sort of the unsung heroes about investment and about business in Asia is the SME sector, where smaller companies courageously, adventurously in some cases, take themselves into other markets or into Asian markets. They don't all get successful. A lot of them do, and I think the SME sector don't always get the credit for being adventurous and courageous in expanding into the region. They tend to be family companies also. Thank you.
Sid, delighted you made the point on SMEs. There's been quite a bit of interest in some of the comments about SMEs and their contributions. I'd like to highlight that we've actually undertaken a number of studies focused on SME engagement with Asia, two in particular last year, Growing with Asia and Activating Asia, which were entirely focused in SMEs and available through asialinkbusiness.com.au. It was done in partnership with the Commonwealth Bank. We focused on large companies here because over the last 5 years, we had received a lot of feedback that perhaps they were a bit underweight in Asia. And of course, there are some mixed results in this report. It's a lot more nuanced than it appeared to be. I might bring in all the panel members here because there's quite a bit of discussion that's coming through about how Australian companies, the large listed companies, can go about actually identifying capable board members. So when we speak about Asia capabilities, just to clarify, we speak actually about 6 individual and 5 organizational capabilities. But when we're speaking about individual board members, we're speaking about individuals who have a sophisticated understanding of markets, who have lived and worked in the region, language capabilities, deep relationships, understanding of government, so on and so forth. And there's often this discussion which ends up quite binary. Should we seek out Australian expatriates who have had tremendous experience living and working in Asia, often for large multinational companies? Should we seek out those of Asian ethnicity because of their connections back to their home markets? Or should we look for individuals who actually are neither, but actually have certain virtues that lend themselves to being really good at concluding joint ventures and strategic alliances? Christine, I might come to you first to hear your perspective on how do we balance all these competing views.
Well, I think the good news is Australia is a very diverse country. 30% of us were born overseas, and 49% of us in Australia have a parent overseas. So you don't actually have to look too far to be able to find some really capable, actually Asian people, as well as people like Diane and myself and Tony, who spent part of our careers working and living in Asia. There's a fantastic guy called Iwan Sunito. He founded Crown Properties. Forgive me, Tony, on that one, but a great guy, Indonesian born, but considers himself Australian. Like, he would be a massive asset for a board who is thinking of venturing into Indonesia as a market. I think we're incredibly privileged in our diverse makeup of our population. So there really is not too many excuses. There's a plethora of people on our doorstep.
And sometimes I think boards have a conversation with themselves about what's the best place to use somebody, because the director has a very particular governance function. And if you're starting to really move into Asia, the person who's got that really deep experience, you may want them actually more aligned to management and able to provide that coaching and the connections and be more directly involved in the business. And so I think, the Wesfarmers board often has a long conversation with itself about retail skills, but what sort of retail skill do you get? Do you get someone who's very related to discount department stores or very related to DIY? Or is it better to have a suite of advisors who really can illuminate to the board the opportunities and risks, but then can work directly with the executives? And so I think for a lot of the things that we're doing, we're better off to have those board advisors.
Just from a management view, I think one of the things we have a US director and we have a British director on the board as well, because of the diversification of how we've spread the business. I think the point Diane raised earlier, I think there's a lot of challenges with you trying to hit a lot of diversity stats, and there's a lot of challenges for boards today, and they've set themselves some pretty heavy targets. And so I think you're trying to balance that diversity you're trying to get on the board and with bringing some of the capability. And I think for me today, definitely having a Nicola and a Jane on the board really gives me what I need. But in the future, as we are trying to really expand the presence, to have someone with the right level of real estate experience could be quite handy, because real estate is a very local game. And so having those right people where you think they're going to add the value is quite important. Plus, you do need to get directors who want to understand Australian governance. It's a bit different. And I think that poses its own challenges. So they've got to understand what they're signing up to. And recently we listed a global REIT here in Singapore. I've got a couple of very senior, capable Singaporean directors on that board, which is listed on the SGX. But I think there's talent either way, and I think Australia's pretty fortunate to be able to access directors from many different pools.
Mokan, if I may just add, my point is that I don't think you necessarily need to go to Asia to benefit from investing in Asian capabilities in management and board structures. Asia is doing a very good job at coming to Australia. Within supply lines, there's most likely to be Asian content in one form or another. Within financing structures, it'll be the same. Within the employee cohort, in the companies in the employees that work for us all, there'll be a range of Asian cultures. and building those capabilities, stand the benefit of providing great outcomes in Australia, let alone in Asia.
It's very, very helpful to have that private company perspective as well there, so thank you for that. Tony, I might come to you for a final point here. You've spoken about local talent, and you've spoken previously, I've heard you speak about how you made a real effort to seek out the best possible talent, a Singaporean executive to lead your Singaporean operations. Are there similar efforts afoot to have someone like that on your parent company board, not just on a joint venture company board?
Yeah, look, I think, firstly, I'm fortunate. I've got Shirling Yang, who's my CEO of Singapore, and she's got 15 years experience of being a CEO of local Singaporean companies. So to have someone of that ilk on my leadership team just makes my job so much more easier when it comes to relationships and managing the various stakeholders. So I just can't stress enough the importance of this local person, plus driving the culture. As an Australian company, we sometimes forget, I keep telling people, put your passport at the door. I'm living in Singapore, you're now a Singaporean. And you must take on the characteristics of the local environment that you're playing in. Look, I think your point, Lincoln, I think ultimately the board will consider that over time, if they need, a different person on the board. And, to me, it comes back to the point, I always put up people I see that are talented. So my job's to look at people I'm coming across and suggest to the board, these are people we should have on our list. So it comes back to this demand and supply. It's about always identifying and keeping a good long list. And if the right opportunity comes up, then maybe we should be able to, get someone else on the board over time. So I think it's just being proactive and understanding those people that are available.
Thanks, Tony. Balanced as always. In the interest of time, I'm going to close the panel discussion there and thank Christine, Diane, Tony, and Sid for their fantastic insights. There's a lot there for all of us to go and think about as we think about all of the data and analysis, findings, and recommendations in this report. But thank you so much to the four of you. I would also like to thank all of you participating for your questions. I'd now like to invite Task Force member and CEO of Chartered Accountants Australia and New Zealand, Ainsley Van Onselen, to formally close this event.
Thanks very much, Mukund. I'm sure you would all agree that was an excellent discussion, giving a glimpse into the really rich evidence-based insight contained in the Winning in Asia report. As the CEO of a membership-based professional organisation, trust, reputation and ethics are at the core of what we do every day, enabling chartered accountants to be trusted advisors to and within Australian businesses. So it was particularly pleasing to see the report reference several times the importance of trust, both in terms of consumer trust in brands, but also trust in long-term personal relationships with business partners in Asia and what that means for Australian companies. Looking past COVID-19 and the medium long-term road to recovery, some other key takeouts from today for me include that Australia's future prosperity will rest in part on its ability to trade with and invest in Asia. The proof of this is to look at the superior shareholder returns in recent years from companies investing in offshore expansion. The number of ASX 200 companies exporting to Asia in the last 5 years increased by 10%, evidencing the emerging significance of rising exports to Asia to a company's revenue performance. It was also clear from the case studies highlighted today, particularly from Shaymar and Mary Manning, that there is no one-size-fits-all approach to international expansion. You simply can't cookie-cut one company's approach and adopt it as your own and expect success. It needs a case-by-case strategic rationale, followed by really strong execution. However, one single unifying action all companies can do to strengthen their chances of success is to be Asia capable. It was fascinating to read in the report that over 90% of senior leaders on the ASX 200 would not qualify as Asia capable. And as Di mentioned, we can grow our own. So there is a key opportunity there as senior leaders to develop the cultural skills needed to execute on the opportunities. particularly as Australia transitions to more service-driven outbound investment. Also of note was the importance of having boots on the ground and bolstering the external relations presence in the region as a revenue enabler and not just as a cost centre. So in conclusion, I'd like to take a moment to recognise what an incredible collaborative effort this has been across multiple levels with project partners, task force members and contributors. And on behalf of the task force, I would like to thank the executives who were part of the case studies and to the individuals that were interviewed to provide insights to this report. Particular thanks go to our speakers today and our knowledge partners. So Daniel Selikowitz from BCG, Shay Ma from Cooper Investors, Mary Manning from Ellerston Capital, and panellist Tony Lombardo of Lendlease in sharing the perspective of an ASX 200 company operating in Asia. And of course, Asialink Business. Thanks also to the Honourable Simon Birmingham, Minister for Trade, Tourism and Investment, for his video message. And I'd also like to thank the task force for your ongoing commitment to this really important cause and for your continued work in this area. You heard from some of the members of the task force today, from Mr. Sid Myer AM on his views on what makes private companies successful and the future importance of India, from Christina Holgate of Australia Post on the key factors essential for successful expansion into Asian markets and the issues currently facing the market at this time, and from Di Smith-Gander AO. She gave a great board level perspective with her experience at Wesfarmers, and confirming Christine's point that it's essential to bring your board on the journey and to have a long-term view in mind. I'd also like to thank the other task force members, Angus Amor from the Australian Institute of Company Directors, Jonathan Young from CBA, Yasmin Allen, Director of Cochlear, ASX and other boards, Peter Varghese, AO, Chancellor of the University of Queensland, Sue McClellan, Chair, MTP Connect, Ajay Bhatia from Car Sales, Martin Commons from BHP Bulletin, and from my colleague at Chartered Accountants Australia New Zealand, Simon Grant. For all of you who attended the launch today, you will shortly receive a survey at the end of this session, and we kindly request that you please spend a few minutes to complete it, as it does provide such valuable insight into future events. You'll also receive an email with a link to download the report, but for those of you who are impatient and keen to see it now, it is available on the website at www.winninginasia.com.au. So finally, on behalf of all project partners, including Asialink Business, Chartered Accountants Australia and New Zealand, Australian Institute of Company Directors, the Commonwealth Bank of Australia, and the Sid and Fiona Myer Family Foundation, I would like to thank all of you in attendance today for participating. Please stay connected over the next 12 months as we undertake extensive events and engagements on the findings of this important report. Thank you.